economist Eoin O'Callaghan from BNP Paribas. Thank you very much, indeed, for joining us. And I guess the question is whether or not the decision to break up this bank is going to do anything to restore investor confidence.
Sure. I mean, first of all, we should say that the good bank, bad bank model is very different to that proposed by the actual business itself, in the sense that the good bank won't actually be making any new loans. It's really a structure to keep depositors feeling that they're safeguarded in the new institution. In terms of what it does for Ireland, it creates a little bit of certainty over the future structure of Anglo. But what it doesn't do is it doesn't remove the uncertainty about the future losses at Anglo, which is really a function of how far commercial property prices will fall in Ireland.
So what does this mean going ahead for the economy?
Well, it's really part of an ongoing process of fixing the banking sector. The banking system is really hanging over progress that the government's been making elsewhere. Fiscally, the government's very much on track to meet its budget targets this year. Unfortunately, though, bad news on the banks has been compounding the problems of the government, and is really one of the key reasons why spreads have been blowing out in recent weeks.
As you say, the peripheral bonds have been under a great deal of pressure. That there's been a real lack of confidence in bond and equity markets when it comes to countries like Ireland and Greece. And the austerity measures, the cutbacks in spending, don't seem to have done anything to help confidence either.
Well, no, I disagree with that last point, because I think if you remember back to when Ireland's spreads first blew out, the government's willingness to tackle its fiscal problems was very well received by the market. And indeed, in terms of which governments were willing to tackle their problems, Ireland was always top of the list. The problem is now, with some global growth indicators slowing and the costs of the banking system bailout increasing, some analysts and indeed the market are asking whether there's not only the willingness but the ability to really cover the costs of this bailout.
Well, let me put what you say to Bill Hubard. I want to bring him in at this point, to chief economist at MIG Bank. Do you agree, Bill, that initially when the austerity measures were announced, there was some positivity, some optimism in the markets, and that's essentially died down now? Well,
very much so. I mean, as we saw, let's go back to May when the euro was at 118 and everybody was talking parity, parity, parity. Within about 6 weeks, it went to 130. I think the key thing here is the market, not Ireland, not Greece, et cetera, et cetera. It's the global world market that, unfortunately, Ireland and Greece now are being refocused on. But I think the key thing to look at here is Ireland, unlike most of the other countries, was the first one to step forward and say, from a government and political standpoint, we are going to do the best we can. And I think we are. And unfortunately, I think Ireland is probably just getting, quote, bad press.
Owen, what's your response to that?
Well, I think that's right. I think there's a lot of positives that get lost in the news stories about the banks. Firstly, the economy needs to restructure away from domestic demand-fueled growth towards net trade, and that's a process that's very much ongoing. Net trade contributed 5 percentage points to growth in Q1 alone, and the multinationals in Ireland have been doing very well indeed. In addition, as I said before, fiscally the government's on track to meet its target. But I think in terms of the forward-looking element of it, people are a little bit more concerned about the growth targets in the banks.
That's what I wanted to touch on. You say the government's on track to meet its targets, and yet it's been 4 months. We've had a near $1 trillion bailout package to help indebted nations, and yet we are still seeing these concerns about the sovereign debt crisis weighing on sentiment about the overall health of the financial system in Europe.
Yes, I mean, Ireland's in a difficult position because whilst the government has really done a lot of what was asked of it and did it before a lot of people expected it to, and has taken some very difficult measures indeed, really the uncertainty in Ireland is a function of falling property prices, and that's not in the government's control. And secondly, a lot of the spread widening is a function of slowing global growth. Again, not something in Ireland's control.
Bill, why is Europe finding it so difficult to restore confidence in its banks right now?
Well, it's not just Europe, it's the rest of the world. But let's just take let's go back to our good friend Nouriel Roubini. Last February, the world was going to fall off a cliff. Well, I guess I'm like Warren Buffett. We had Barclays Bank bonds trading at 21%. We had Lloyds Bank bonds trading at 21%. Thank you, Nouriel Roubini. It was a time to buy. This is going to be the same type of situation. I mean, this is an opportunity we saw yesterday with Norway buying Greece, et cetera, et cetera. It's a question right now. It's not Ireland. It's not etc. It's basically a question of the market now is very, very concerned about the global economy. Unfortunately, Ireland now is in the focus rather than somebody else.
We'll continue to explore these issues, of course. Eoin O'Callaghan, Bill, Hubard, thanks very much.